Thanks so much for tuning into the Trade Setup with me, Niraj Shah. It's a wobbly picture that I'm welcoming you to this morning for India. Global news flow first. US stocks came off as weak treasury sale lifted the US yields. 3 days on a trot now. The US markets have seen, for different coupons and maturities, weak treasury sales, and that is having an impact on yields and thereby on sentiment. And in fact, Asian stocks are tracking the US peers lower as well. So we don't have a tinge of green in a meaningful way across the risk asset screen, particularly the equity screen in today's session. Amongst other things, when we talk of defense spending and why defense stocks are doing so well, across the board, countries are talking about higher defense spending, and look at the number at the US. A US GOP senator wants defense budget to surpass $1 trillion. That's 1/4 the size of India's overall GDP annually. That talks about some kind of spending there. Amongst other news, corporate news, BHP has abandoned the $49 billion bid after Anglos refused more talks. And speaking of billions, Aramco to launch a $10 billion share sale on Sunday. So, well, a lot of talk of billions and trillions this week, but markets aren't quite catching up. Like I said, US markets had a bit of a tepid evening to themselves, and it's showing in the way Asian screen is performing as well. Most of the Asian markets are looking wobbly. Nikkei certainly 1.5%. Kospis look wobbly. Hang Seng flattish. I mean, China and Hang Seng dance to their own tunes, right? But most of the others are looking wobbly. SGX Nifty, or the GIFT Nifty, sorry, showing to a further downtick as well. Remember, part of this we've already absorbed. We're no longer at 23,000. We're at 22,642. So in some sense, we've already had a bit of a weakness. But, you know, VIX stays elevated. So a higher VIX plus the monthly expiry today will bring in a volatile Thursday into fruition in the session today. The problem for the markets currently, and rightly so, ahead of a major event which comes once every 5 years, there is this absence of a direction or a trend. A very clear absence of any trend, because at 23,000 odd, we are not showing a one-way trend. The markets are correcting around these levels, maybe at 22,500 odd. We'll probably see some buying coming in as well. So there is no trend right now, and therefore a bit of a no man's land, if you will. And frankly, it's very difficult to call markets in the current scenario. I think anybody who can tell you, or who tells you that the markets will do this, is actually guesstimating, because there's so many factors at play that it's almost virtually impossible to call the markets in the current juncture. Maybe post-Tuesday. Until then, very, very difficult. The only thing that is looking certain is defense stocks. I mean, they're showing very strong results and therefore likely to be bought on dips. We've seen the first evidence yesterday after Mazagon Dock numbers, or even before that, some of the others had gone up after falling quite considerably day before yesterday. So defense is that pocket that is almost getting bought on all dips. So that's to be kept in mind. Lots of stocks today. Let's try and get to some of those. First up, Tata Steel in focus. So the numbers came out. Lest you get confused with the numbers, I thought the Jeffries note put it up well. Remember, this is the first cut, not the final note. But they say that it's weak. Tata Steel was weak, but it was better than estimated, and that is actually the punchline. The reported EBITDA rose about 5% quarter on quarter, down 9% YOY, but with these numbers also, it was 7% above the Jeffries estimates. Aside of that, the EBITDA per ton loss narrowed very, very sharply in quarter 4 from what it was in quarter 3. The management plans to infuse some capital as well. The net debt, by the way, was flattish QOQ, and the management plans to infuse some capital in the global ops in order to aid the restructuring cost and the debt at the global level. So keep that in mind, Tata Steel UK level. So this stock, because of a slightly better than expected performance, might just hold out in a slightly wobbly day today for the markets. By the way, speaking of steel, JSW Steel could be in focus. A company statement suggests that they'll announce a play in the segment that is globally dominated by ArcelorMittal and POSCO. I do not know the nature of the announcement, to be very honest. Don't even want to know before it comes. But just saying that JSW Steel could be in focus today, so do watch out for this one as well. From results, Cummins, I thought, stood out like a shining star, really. Look at those numbers. Revenues up 20% at 2,319 versus 1,934 crores. But margins is the play here. Margins at 23.2 versus 17.1% for a company of Cummins' size and stature to show 600 basis points expansion in margins. I mean, ABB did that. Siemens has done that. Cummins is doing that. There's something that's happening at the MNC players' end. This is a different player relative to ABB and Siemens, of course, but I'm just saying this. PAT up 54% at 539 crores versus 349 crores. solid numbers, and Nomura attributed this margin rise to multiple factors. Nomura said the EBITDA margin at 23.5% came in as a positive surprise, of course. Amongst the reasons, they've attributed this margin uptick to higher growth in the high horsepower segment and the retention of pricing amongst key factors that led to the margin expansion. Let's see, the con call is at 10 a.m. today, but more importantly, the management talks to us tomorrow. So you might want to tune in either for the con call or for the management commentary tomorrow at 9:30. So keep an eye out for Cummins. KNR Construction is the other one which you can argue hit the ball out of the park, if you will. Revenues up 13%, which is fine. Look at the margin performance again. 26.4% versus 19.6%, as a result of which the bottom line numbers expanded too. By the way, the bottom line is up 2.4x, not just because of the margins. There's also another income, I must admit, and that will, the other income for KNR was 125 crores versus 10 crores. So that added to the heft. But be that as it may, the margin and the PAT performance even otherwise was very strong. So watch out for KNR Construction. Speaking of good results, 2 or 3 more. Indegene, revenues were up about 6.5%, nothing too great there. But again, look at the margin performance, 20.6 versus 15.4. And as a result of which, PAT up 94%. It's not a cheap stock. 37, 38 times for a small cap is not necessarily very great valuations, but the numbers were rock solid. Maybe the stock reacts positively today. Healthcare Global is the other one, wherein the revenues were up 12%, but again, margins improved, as a result of which, and maybe some other factors as well, the bottom line performance took somebody's breath away, right? 3.8 times at 23 crores versus 6 crores. So watch out for Healthcare Global in the session today. Watch out for Lemon Tree as well. You could argue a bit of a mixed feeling because revenues are up 29%, but margins cooled off a little bit, 300 basis points. But on that base, you can forgive a company for missing 200, 300 basis points, right? 55% EBITDA margins. It could always happen in a quarter. Net profit still looking healthy. So let's wait and watch. Margins a bit weak. My guess is the street should be happy with the revenue number growth. Let's wait and watch what the stock does. What else? Heritage Foods ahead of estimates, of course. Revenues up 16% at 951 versus 918 crores. Margins ahead of estimates, well ahead of estimates, 7.4 versus 6.1. As a result of which the bottom line too well and truly ahead of estimates, 40 crores versus estimated 30 crores. Very likely could react positively as well. Shriram Properties is the last one which will react positively in my list, at least, of course. Revenues at 358 crores, up 110% YOY and 14% QOQ. Remember, for property companies, even pre-sales are important. But Shriram did very well on pre-sales too. Reported pre-sales were up about 43% YOY. The guidance for FY25 on pre-sales is also very strong. 2750 to 3000 crores, which is aided by 8 to 9 launches. Just for perspective, the FY24 pre-sales or a number was about 2300 crores. So they're guiding to fairly strong growth in FY25. So watch out for this one. Now some stocks which may react negatively as well. Rishabh Instruments, revenues up 2%, flattish number, but margins and PAT very wobbly. EBITDA margin at 10% versus 14%, as a result of which an 85% drop in PAT. 2.3 crores is 15.1 crores, very weak numbers. What else? We should get 2 block deals. General Atlantic will probably sell stake via block deals in KFin Tech at a discount. The floor price is at 712 versus 742 current price. So very likely the stock could react negatively on this one. Watch out for this one. The green shoe option included, it's about 6.8% of equity, so not a very small equity. And RR Kabel, this is a clean out trade, but TPG Asia to sell its entire 5% stake in the company via block deals today. A block deal is likely at about a 4% discount. Again, media reports already reacted a bit, but it's a clean out trade. If it gets absorbed well, then RR Kabel might actually do better. So do watch out for this one as well. I haven't mentioned Edelweiss, viewers. It's been directed to stop taking money into its ARC with immediate effect, and this might have a bit of a negative bearing on that stock. So do watch out for Edelweiss. Lastly, do watch out for Eureka Forbes. Nomura has upgraded the stock, even as they've lowered the target price, but upgraded the stock to a buy. So Eureka Forbes is the other one that might react positively. Thanks so much for tuning in to this trade setup on YouTube. Hope it helps you. Please leave your comments if you want to see something else or if you have feedback. Much appreciated.